Okay, guys, I'm going to go ahead and start this live stream. Like always, none of this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes. So I'm back to kind of my normal cadence when it comes to putting out videos. And so I want to just do this live stream. It's been a long time. Uh, and I thought we should catch up on things. Just, nothing's really changed based on what I saw the other day. I warned everyone about the 45-minute bullish divergences that was in the market, but the foreign daily are due to reset. So I believe this pump is short-lived, even though the short term did show a more bullish setup, which I think played out on Friday. And we could just kind of go back and confirm what you want to see is this divergence erased. And once it does, the C leg can end at any moment. The 4-hour looks like it just erased divergence there, so it could be a short C leg. I actually think it could extend a little bit more, but I do think it's on borrowed time, and the connector was just very shallow, very small connector wave, and the 45-minute gave us that warning. And if you don't know what I mean, watch my last video update, and I pointed that out. And so again, going back to the daily indicator, we erased divergence. So therefore, we have our 3 swings, and now the correction could end at any moment. This could end like that. It can keep going, excuse me, higher as well, and it can even become an expanded flat. So that's why I don't think the indices are a good trade, except for a short in the Russell. I don't think this is. I think you're just gambling here. And I don't think it's a setup. There's no setup here for those that are trying to go long or go short. If you're going long, it's super dangerous, massive danger. But with the risk comes all the reward, as you can see here. And then if you're short, it can just keep extending, and then you run out of money. So this way, there's other setups in the market, much clearer. This is not a clear setup, but ultimately we will go lower. And I think one of the clearest indicators that I've got is just look at the monthly, guys, on the SPY. You've got the stochastic wide open to the downside. So the prevailing trend is still lower across the market. And if we look at from the peak in August to the recent peak here, we're still below the trend line. The bears on the longer term on the monthly time frame are still in charge of the market. And more importantly, the monthly is about to break the 2009 trend line, and I believe it will break it. And when it does, we should get a quick flush, and we should hit this oversold area, and then that should end this bear market, because that's essentially what this is. I know people think this has been a bull market, but look, guys, we're still under the high. So this is just a bear market. It's just a massive a lot of choppiness, but it's a massive bear market with no capitulation, but that a capitulation event will happen. So this is what I'm looking at right now when I see the market right now. And the clearest indicator to me, there's more downside, is this 5-wave move here. It's not in 3. It's not in 3. And these don't even subdivide into 3, so you can't even call it a triangle. Look here, 1, 2, 3, 4, 5. So this isn't some triangle. I know some people are like, oh, it's done. It's like a 4. And this is the divisions within these waves don't, triangles have to be the 3s, 3, 3, 3, 3, 3 to get that. And it's not really a good look. Usually triangles are more sideways. So anyway, I think this is where we're going. And I always had a target on the SPY between the 2 and the 4, somewhere around 443. This area, 443, 444. So that's what I'm thinking. So I still think there could be more upside in the market, but it should turn down at any moment. We had the Moody's downgrade this weekend, not downgrade, but warning on Friday right after close, ironically, and then the government shutdowns loom in. So there's some bigger events, and then of course CPI. So there's some big events that could trigger a waterfall sell-off if things don't go the way the market expects. Since I do think the monthly does need to reset, this setup that I have here isn't likely. It's likely to go to new lows. It's likely the October low will break. So that's just my take on the market. And I know FOMO is hard. It looks amazing to just go long, and it's been a great run for those who got it, but it was also a great run going short here to here. So each side of the market, if you play it right, there's a lot of opportunity. But if you trade in the chop and somewhere because you're bored or you have nothing to do, then you're going to lose most of your money. You have to wait for these kind of extreme, scenarios to before you can try to even gamble. But trading in this area, general areas, was very detrimental to many traders. All right, I'll go to your questions and then we'll just see what you guys have today. Nothing to be confused about. I mean, the market, again, just big picture. I think you have to keep your look at the big picture, right? This big picture here, and actually just go to one of my longer term charts here. So big picture, what we have is bearish divergence at this peak, and we have a trend line that's about to break. And again, this is on the quarterly SPY, as you can see. So this is going to open up the door to bear market. And we see this across a lot of individual stocks are getting freaking destroyed. Just not the Magnificent Seven, but their time is coming. And when it does, that's when the indices, that'll be when the indices lose everything. So in here, again, big picture on the monthly, I could put it there or here, but this will break. And again, the stochastic is wide open to the downside. This will come down. So no matter what happens in the daily cycle, the overall view is still going to be pulled down by the monthly. The secular trend is lower. It's topping out. It's topping out. It's got this little bit of a rally, and it's about to it can't make another high, and then the market will unravel fast. Unravel fast. Again, I could be wrong. Do what's best for you. And again, you could label this very easy chart, right? Not too difficult, right, to label it this way. Something like that. It's my guess how this thing will play out. And we'll come back around here. Something like that. That's what I'm thinking. And that should break this trend line here. Just like that. So this is what I'm thinking is going to happen in the future. Again, not a fortune teller, but this is kind of what I'm thinking the most probable path for the market at the moment. But again, the market is trying to clear out leverage. It's trying to confuse everyone. It doesn't want either side to make any money. So that's what it's trying to do, especially the short side. So once it's all cleared out and the shorts completely give up, and they'll never short it again, dare short it again, which is what's happening, then I think it will collapse. And again, big picture, there's nothing bullish about this chart, guys. We're still below the December 21st high. There's nothing bullish here. Just a lot of counter trend rallies that seem to fail. And we've seen this before. Corrections. All throughout the .com correction, right? I'm sure they thought this was an amazing bounce here, only to fail. How about this one? Pretty amazing, spectacular, right? This one. So you had these amazing bounces, but they both failed. And even this one failed again. So that's what bear markets do. You get these spectacular bounces because the system's trying to get rid of the leverage, especially on the short side, as it falls. And then this is the rare flat pattern. Flat pattern usually has this crash in the C wave. So those are rare. If we do make a higher high, that's what we would be looking forward to. If for some reason this can break 480, we would be looking for a expanded flat and then we would have a follow-up, essentially straight down crash later, just like we saw there. But I don't think that's going to happen. But you'll have to make your own decision on what you think is going to happen. And as you can see on this line, we're just back testing this, right? Kind of just back testing that channel that broke. Did it wick out? It looks like we closed right above it. So let's see on the weekly. It'll be interesting to see if on the monthly candle that turns into a wick and comes back and closes November below it, which I think it will. Okay, so this is what I'm looking at in the market. So I wouldn't be confused, but if you are a day trader, it is very confusing because we haven't had a bear market like this since the dot-com days, and a lot of day traders have never experienced chop like we are seeing now. So yeah, it is confusing. It is confusing. I agree. It can be this type of trading. The way I traded this downtrend is just in and out of shorts. You know, you don't get greedy. The pattern breaks. You take profit and wait for a new setup. And then you're constantly taking profit. You're not letting things ride. You're not letting it ride. That was my strategy all along. And then because on the short side you get this chop. Now the long side you get these impulses, but when they end very, very catastrophically. So if you don't, there's no real margin for error to take profit, but you could still push it. But I believe if you've made it long here and you've made it all the way up to here, I mean, at some point you have to be, you can't be too greedy. You want to take something off the table here. It's just you're just really pushing your luck again, because the daily cycle will reset. This stochastic will come all the way back down, and so will the 4-hour. It isn't going to stay up here forever, guys. It's coming down. The only thing that saved the market was the 45-minute and I mentioned that on my video, and now the 45 minutes ready to come. So now, and then that gives you your connector. Now your third swing can be done. It could be truncated. Maybe it goes a little bit longer on Monday. But this is it. This is the moment of truth. And I do believe once we come back under this pattern, this downtrend line, it will rapidly unwind, is my guess, because this will become a false breakout. A false breakout. If you're bullish, you have to defend this 369 on the Qs. If you're above that, I wouldn't really be, too concerned bullish. You got to be, this market's in control by bulls, and it could continue to extend. But once I believe this level breaks and closes below it, then the bears have retaken control of the market. And I believe, like we saw in the Russell, it will unravel fast. The Russell's also showing a lot of danger, a lower low sequence, very weak on this bounce. This is very impulsive here on the way down, and more than likely it's ready for another two wave at any moment here, and then should come down. So this two can end at any moment, even though it may still go higher. If by some miracle you get another swing up, there is a nice short opportunity. This would be a great setup to short the Russell at 180, IWM at 180.39. That would be the setup somewhere in this area here. But you'll have to do what's best for you. If the bullishness continues, this would be the setup for this. But I don't think it's going to get there. I think it's done here, and we'll continue lower. Okay. Hood and SoFi. All right, so Hood I did warn about. I didn't like that trade anymore because with the Russell going lower, I do not like any small caps, period. As you can see, the small caps are being decimated. Go ask what happened to Plug Power on Friday. I don't care about their earning. All these charts on small caps are in a lot of trouble because fundamentally, as you know, small caps typically don't make a lot of money. They don't have cash flow like the big caps do. They have debt. They need the service. These higher rate environments are going to destroy it. And if we go into a recession and sales go down like we saw, there's a chance a lot of these small caps are going to go under. They're going to go to zero, guys, zero. and you know, Plug Power warned about, you know, it may not survive without more cash, right? So that you're going to hear more and more of that. So these small caps are not long opportunities anymore until the Russell can get to a capitulation point. So I do look at the hood to continue lower into this area, but perhaps it could go even beyond that. But I don't think hood is going out of business. So I think with the small caps, you're going to see these lows break, the October or June lows, whatever one they had, and then it's going to be either they stay supported or they go to zero and they're gone. They're bankrupt. Their equity holders are going to be wiped out because of the fundamental environment we're in. So I do think the hood is just completed this nice bear flag that's now finished, and now it will capitulate lower into the shaded area, and of course, like we saw in the indices, nothing's in a straight line. It will chop around, and again, this could be the 3 here. It could be another 1, 2. There's you do have a gap here, so there is a chance that's your 3 of 3, and now we'll do some 4s and 5s, but I do think it's lower. SoFi is also another one. It trades in a small cap, but also the financial sector, right? And it reported, if I remember right, some good earnings, but again, it's still going to be susceptible to the market forces. So we had this as a 1-2. It looks like the 2 came up here in a 1-2, 1-2 setup, and we'll need to look at the cycles to see if that looks too bearish here. In the cycle erased here, so we turned into a 1, 2, 3, 4, 5, something like this. So now it's in a 2 wave. It's correcting this whole move. You need to be careful of the expanded flat scenario. And what do I mean by that? And this is always this destroys the traders, right? And this market has been doing this since 2021 started a correction. You get that. So the daily cycle could still come back and go higher. So I think you have to be careful of this trap, because you are correcting a multi-month cycle, and that trap would take you up to $9 as another opportunity to short it if you missed it earlier in this area. It's tough to predict if that's going to happen or not, but based on what I'm looking at here, I see 3. This actually looks like 5, so yeah, maybe you got to be careful. You know, this looks like 5 down, so it could be a 2 here. This may not happen, and then it may be ready for its 3 of 3 moment. So do what's best for you. I think this has a couple possibilities, but ultimately lower. It should go lower. All right, I'll go to the super chat. Thanks, Mark. All right, I'll take a look at these for you. DG, IINU. Okay, let's see here. Requested stocks. So this is one we've never charted before. Let's take a look. It's got a lot of price history. So just based on the chart, it made a higher high sequence, but it does look like it could be a couple things. It could be a 1, 2, 3, 4, 5. It could also be corrective and finished, and then essentially go to 0. So I actually will only look at the recent price history, this leg, and see how I want to trade it. So if it was bullish, it shouldn't have declined as much as it did here. Actually, it's okay here. It's in an area where it could bounce to new highs in this area, but if it breaks 1846, then more than likely the bounce will fail. So right in this area, it looks like to me that you have some bullish. So bullish divergence on the daily is concerning here. to me, but this could be a flat because it came up so high. So this is a really tough chart to try to analyze, but this could be a completed pattern, and but we don't have confirmation of the turn just yet. I would look at this weekly RSI and see if you can get a reset there, which got significant room to go. And then even on this cycle here, let's see here, that cycle, yeah. The daily's open. So yeah, this is very tricky. My guess is it's gonna break this low and then rally and fail again. And just based on what I'm seeing, but you'll have to do what's best for you. Do something like that, and then maybe it's buyable again. But I think here it's kind of not a clear setup. But maybe but I think your risk is this $18 level, and then and see what happens. But anyway, do what's best for you on that. And then the next one you got is ADA on the ADX. Let's see here if I can find it. Okay, we have that charted here. All right, so this was our last update. We're looking for this dip into this area. I think this is where it's coming, and then there should be a bounce. So I still think you're going to get this dip here. Let's just make sure we have all the recent price action. So it looks like you see that candle we had there. So that's going to change our target a little bit, make it a little bit higher, 1193, somewhere in this area to 1047. But look, that would fill this gap, and everybody loves gaps, right? So maybe this gap fills there. I would be also looking at this daily cycle. You're still in a downtrend. So if the daily cycle were to break higher, I wouldn't label this here. I would just say that this is turning into a more complicated connector wave with still another push lower to come. So you still need that push lower, and I think it's going to happen. I think the other thing you want to watch is this weekly. When this push lower comes, you really want to hold this weekly trend. And if that doesn't hold, then you may lose this bullish setup I have here. All these 1-2s, then it could turn into something different. It could turn into like a 1, 2, 3, 4, 5. It could also turn into like an A, B, C. So I would say also the bullish setup's lost if the weekly trend line breaks as this 2 comes down. But as you can see, it's being bought aggressively. There's a lot of choppiness. I doubt we're going to get a massive capitulation here given what we're seeing here. But maybe we'll get down. But I bet that weekly cycle is going to support this, whatever this is, and then you should be able to extend higher. Okay, thanks for the 10, man. 10, yeah, Nirvan, I hope I say that name right. MSOS, I'll take a look at that for you. Okay, so we've done that, charted that before. All right, so we were looking earlier to buy in this area. Now it broke. Typically when it breaks that means this rally will fail for one more swing lower. It's not always a given, but it's usually likely. So what we are seeing here is a more complex correction. So I'll show you how I would label it now. Like this, right? And then this becomes W. Now we're in X and we'll get Y. So it's going to do, so we're going to get this more complex correction now, but this B wave should hold 469. That held it here. You know, looking at how close we came to this low, let me see the rest of the price history on it. Okay, so that's the low that we're looking at. Let's see. Got to remind myself what this chart looks like. Okay. Yeah, I'm looking at it now. Yeah, I'm gonna call this B in here. So I think we're in the C wave now. One, two, three, four, five. Yeah, so I'm thinking I think we're in this wave now. Perhaps you can get to 11, 12, $13, somewhere in there. As long as it's above 496, it can see that. You broke the trend, right? That's bullish. The daily here, our size turning up, although we should see a correction. So there are pullbacks, right? So you should see a two wave coming soon to probably retest this area, is what I'm thinking. And the weekly looks like stayed supported. As long as you're above that, it should be bullish. This weekly should be turning up. How's the 4 hour? Yeah, so short term, it's due for a pullback. So this is due for a pullback short term, but it's a trade opportunity as a long against this low, 490. If it breaks 490, I'd dump it. And then this setup's not accurate. All right, thanks for the 10. I appreciate that. Okay, we'll just kind of go back to the questions. Let's see. What do you think when the Fed paused market going up for months before the crash, and we are now? So the Fed paused because I think there was a lot of pressure to not keep going higher, and also, you know, they're trying to give the rate increases time to work its way through the market. But the problem that they've got is the formula for CPI. Right, you can't just go to the store and go, oh, apples are now $1 cheaper, so inflation's down. You can't just go to the used car lot and say, hey, cars are cheaper now, so inflation's down, right? The calculation into CPI has been so perverted over the years and distorted. They're even lost on why the CPI moves the way it does. But there's a huge component in CPI with service inflation, and of course, wages. And wages are tied to unemployment. And just face it, guys. I mean, look at the unions. They're getting what they want. They're getting all the concessions, all that money, all the increases in wages. That's inflationary. And that will show up in the CPI later. Rent isn't going down. It's going up. Everywhere I know, my rent was just raised where I live. I rent an apartment. They just hiked the rate. I mean, so the inflation that they perceive should occur probably won't show up in the formula the way they anticipate. And when that happens, I believe they will panic and have to raise rates to catch up again. Just my thinking, even with a recession, and I think they call that stagflation. I think that's what they call that. So I think that's what we're going into, stagflation, right? And the Federal Reserve back in the 70s made mistakes with stagflation too, right? They paused because it should have went down. They hiked it so much, but it didn't. And then it took, you know, a couple missteps and pauses, and it ended up being you know, they're looked as fools back then for what they did, but then Volcker came in and actually saw the problem for what it is, and he raised rates, you know, well excess of what the market ever expected, which I think scared the market participants into believing they would fight inflation. But right now, I think deep down, no one believes the Fed, Powell, has the stomach to really do what's needed. And the market right now is calling their bluff. And eventually, the formula will show that. The CPI formula, eventually, it may not show it Tuesday, it could, but I think eventually. And then, I mean, look at again, and there are things that are going up a lot too, like orange juice and stuff. Price of you're watching these commodities go parabolic, so it's not like there ain't, you know, I don't know. Again, the battle they're trying to, you know, say they've won and what data they're looking at, but the CPI I think is telling a different story. The unemployment's telling a different story. Wage increases not telling the story. So I think yeah, it's like at three and a half, was it like just under 4%? They don't want to be there either. So I think they will be forced to raise later. This pause will backfire. And once they start doing that, the market will just reverse as quick as it went up, just like we've seen. And then the interest rates will keep going higher. So that's kind of my thoughts on the Fed, guys. So the Fed is not done raising rates. I don't believe they are. I believe they are in a pause, but that pause will eventually have to finish. Now, some people believe they will, have to cut rates because there'll be a market collapse and calamity, and the question is, did they do that in the 70s with stagflation? Right, all this growth was decreasing. Did they? They didn't like just cut rates to zero, right? Because they have this other thing in the background. These prices are sticky, and to get the Great Depression kind of crash, you'll need a calamity that isn't related to the Fed. You need like nuclear war. You need like, some natural disaster that no one ever expects. Some possibly China into Taiwan in World War III. Like you would need that to get the Great Depression crash type. Fed goes to zero again, and it doesn't matter anyway. But I don't. I think we're in. I think the closest analog to where we are now is the 70s, is my guess. All right, so let's keep going. So I only check two tickers to give everyone a chance. So I'll just do your first two, YJ, FNGD. I'll look at that, and of course, so super chat. I'll answer all of them if you give super chats, and that just goes for everybody. I just can't. I'm just not going to answer more than two. All right, so FNGD is in here. So we looked at this a long time ago, and we had this four wave, and it looks like it just turned into a triangle. I mean, that's what I'm seeing here. Looks like that triangle ended, and now we're in the wave, the final wave, 5. Right, lines up with the market kind of nicely, right? So where could you try to pinpoint along 628? I'm sorry, 621 to 467. There. Let's look at the shorter time frames. This probably just lines up with the indices, in a kind of an inverse fashion. 1, 2, 3, 4, 5. Yeah. So this is also a warning sign for mega cap tech, unless it extends and erases divergence. Let's go to the 4-hour. So it doesn't have divergence, so be careful. It is going to extend lower. So it's not a fifth wave. It's actually in a third wave. So something like that. Now this too we could also do something tricky where it's an A, B, C. The reason I don't like it is the 45-minute, as you can see, really reset the cycle here, right? This too, right? And then 4-hour erase divergence, so you don't have a 5-wave. This isn't a 5-wave move. So that's why I'm looking at it, something like that. And then your next one on here is UAL. United Airlines. Well, I know these things benefit from what lower oil, right? Isn't oil lower? But so we want this Y wave to play out, but it should hold this $17. So why you need either 3 swings, and there's our connector. So we're in our first connector in our Y, right? So we're in B. So I don't know when B is going to end. It looks like it made a higher high. It looks like B still has more to go on the upside. Here, like a run. It looks like some kind of run-in flat there. All right, something like that, I'm thinking. Got this gap here, probably fill it, I bet. And then game over. Okay. Can you look at cost? Costco. Yeah, Costco. I've got that one. I don't like it, by the way. It's just so overowned and uncorrected. So I still think it's in a B wave connector that should push one down, one more low. So the question is, when is that connector going to end? So I'm looking for this trend line to break, and eventually it should. Here, if this isn't a connector, then this 2 wave is here, and then it corrected the whole cycle from the IPO in like 3 weeks, and it only corrected what, 25? It just doesn't seem. That seems improbable to me. This looks like the more probable path. So where can it find sellers? It could retest a high at 606. So this is and it could also become a flat, right? An expanded flat. This area. There's these multiple area, like somewhere in here, I believe it should end. Let's see if we can just look at the waves real quick. A, B, C, D, E, C. Something like that. Again, these shorter, there's too many possibilities, but I'm just giving you an idea. It actually could end here. This looks like it tagged a high. We don't have all the price data with trading views, so hard to say, but it does look like it can still go higher a little bit, maybe 593. But the sign will be the daily, the weekly break in this trend line, this RSI. Now, what's interesting here, let's take a look at, so we're still bearish below that line on the weekly. Daily cycle is breaking, which is the connector wave, that's what it will do. So yeah, this is probably the best way. When that line breaks on the weekly, then you know you're in the final leg lower. See, the monthly's already broke. You're just going to backtest. See, that's what's happening. See, you're going to backtest this trend line, and then should get rejected. So you already broke. So this This is already broke. Like think about this parabolic increase, right? This is you know, like South Sea bubble, tulip bubble, penny stock bubble. This is just a parabolic and blow off top, right? It can't continue straight up without exponential amount of buying energy and enthusiasm, and it can't go back. It's not going to go backward, right? So it broke. Boom. It broke on A. Now it's trying to regain its prior glory, but it's just not going to be able to, and that's what we're seeing here. And eventually, buyers just won't be able to push through it because you won't have that enthusiasm building on itself like like a snowball on an avalanche. That avalanche is now over, and it's going to reset. I just don't like this chart because it broke. It looks like it's broke. It's broke, and to say that the whole cycle completed here is just way too bullish for me. That means it's just going to go straight vertical up into this area I have here, 1,000, 1,300, straight vertical. That would be like hyperinflation. I mean, is really consumer that strong? Is that fundamental view that great? No, it's not. It isn't. It just isn't to justify that. So I think this is the right look here, and this is your wave 4 low. And this would be a great spot for it to pick up right here. So I spent a lot of time on Costco because I have a strong opinion on it. Okay, Donald, I'll go to yours for the 5 SPXS. SPXS is, it's like I said, it's testing. It's trying to get out all the leverage, right, of the system. So I was looking at this the other day. So we knew we had this pullback come in, but this is just a massive connector wave. So this is your first move higher. This is just part of a massive connector wave that morphed into something that was not expected. So we're still in B. So now this is the new connector wave, right? If I was trading it, I'm not trading SPXS, but the setup here would be 1393 now for the next push in C up here, and it just turned into a massive connector. Let's see here. This is a little too extended, so maybe what I'll do is I'll go back and we'll change it just a little bit. Tweak it around. We'll call it like this. Something like that. It's kind of like the indices, right? It's going to be hard to find a target here, given the way this looks, because I don't think it's going to do an extension that significant, but I would be looking for divergence to be erased on the 4-hour and daily. It looks like the 4-hour still could I would like that 4-hour down here and the daily a little bit lower. So I think it's got a little more downside, but then not much more. And then that should do it. And then you get a whole nother sequence higher. And there'll be new targets. Now, because it did this, now the targets go even higher. Because it's just the way it goes. So that's how I look at it now. I think it's not a clear setup, but to me, this is kind of the way I would look at it right now. Something like this. Let's take a look here. Yeah, maybe it's better to label it. Again, just playing with the label in here. It's kind of cleaner to do something like this. Something like that. I think that's cleaner. Something like that. Again, usually between the 2 and the 4, about halfway through, so somewhere around here. And that would be 416. There. Okay. Good luck with that, UNG. So we did get this fifth wave here. So we did get this impulse, but then it turned into three waves. So it's in so now it's in this corrective structure, right? It's not impulsing out. It keeps producing ABCs, right? Um, and we broke that low. So it's just it's in this massive corrective structure. It should be ready to go at any moment. I mean, that's what this looks like to me. A W, X, and now we're in Y. We broke this low. Um, 602 could be the like the you know the there a retest of 585. But I think it's just testing the patience of a trader, trying to shake leverage out before it can make a move higher, a real move higher. The daily divergence is looking good. Yeah, so this should be coming to an end soon, but not quite there yet. And see, that's even in three. That's in three. So everything's in three here. So I mean, it could be finished here. So like, I think it's just, to me, when I look at this pattern, it looks like to me it's just in a big corrective structure. I mean, we could still even be in X. It could just keep going like that, right? Just chopping around. But I think if you try to trade it, right, you can buy down here, sell up here, and just keep doing that. Eventually, it'll break out of this basin pattern. All right, so keep going. Like I said, I usually stay on for an hour if you want your question answered. If you super chat, I'll go right to it. UNH, I'll go take a look at UNH. Again, I'd like to see this B wave come down. To 435, 365, somewhere here. To me, this looks like A, and then this looks like a lower low. See, and it broke the. It makes it something like that. Maybe it can even, if you know there's your 1, 2, 3, 4, 5. So it could be already B's already in here. So very tough chart, but I do think it's got another swing lower, just like I have here. All right, next is and like I said, I only answered the first two. So TLT TLT's got another low coming. That's the problem. You know, we finally hit this area, by the way. It's 83 area, but I do think it's got one more low coming. I believe Y is going to be a little more extended. I believe that's just one of two of the final leg in Y. So I think it's got something like that coming. But once you break that low, it could become game over, and then it becomes an impulse, and then I wouldn't even look to buy it anymore, to be honest. And this is I mean, if we all know when we break the low, the all-time low, those charts go to zero charts, and the TLT may be no different. And maybe there could be maybe there's a sovereign debt crisis in the United States about to hit, that everyone's oblivious to. I don't know, you know. So the 20-year looks like this in relation to the TLT. right? Something like that. And it could actually be probably done that first impulse here. Something like that. Uh, there's a lot of possibilities, but the problem I've got is we had 5 up, we correct it, and you made a higher high. So now, based on my system, which works most of the time, not all the time, right? It's not 100%. If I extend it out, 8.2, 8.2, 9.3, possibly even 10%. That'll be the time to buy TLT when it's up here now. How it gets there, I don't know. Could it be straight vertical in a crisis? Sure, it could be. Could it be chop? Could we still be in 2 and trap more people? Sure. That's why I don't like trading bonds right now. Could it be something like this? And then out, it can be, like I said, it could be so many things. I probably have 5 or 6 different charts to show, but ultimately we should be here in the future, right? Just kind of project the trend out. 25, 26, 2026, somewhere around here. So sovereign debt, and we're already seeing it, right? The downgrades, the chatter, people going on TV worried about our debt for the first time. I mean, yeah, so we're already starting to see this play out. So I don't like the TLT. I would try to avoid it at all costs, but I know people, it's so low, so cheap, but I think it's a losing bet. It's a losing bet long term as an investment. Just my opinion. Etsy, we have this target on Etsy in the 40s, I think. It just hasn't got there. It just hasn't got there yet. So it still has more downside coming. Let's see here. Yeah, it's in this final push lower as long as it can keep divergence on the 4-hour. That bounce may have been too strong here. So it looks like it may be in a 3-wave corrective move. So this could be a connector trap. It may not be like a 2 like I have it. It still could be a buy here. Don't get me wrong, but it could be a connector trap. And then lower. Like that. So so you got that divergence there. Here you don't have that. All right, so I look at this as like 5 up from the low, 3 down. My guess is this is a connector. This is going to be a mess to trade in this area for a while. I don't think it's going to go to a low. Like it should bounce. So if you're trying to trade it, I would say this is the area to buy at 47.69 for a trade. But I don't know. Like I think it's going to chop around here for quite a bit of time. This structure looks like 5 waves, which means this is really a 3-wave connector. So this is some kind of B-wave connector that we're in. And if that's the case, then this is just trades. It's tradable, not investable, if that makes sense. Unless we can get some bigger capitulation. But for now, I would still think it's lower to where I have it highlighted. All right, let's see. I don't chart AMC, man. Sorry, it was a split. It's not an accurate. I won't do a good job on it. IWM. So IWM gave this update earlier. I believe this is a nice impulse. We bounced into. So the question is, if the market could continue the rally and the Russell gets another swing higher, this could be a great short opportunity in the IWM at 180, 181, 182. Go short here for this massive downside move. but there's a chance it may not happen, and we're in this too, which could still go a little bit higher, and then we still go down. But ultimately, the market, tipped its hand. It broke the lows, opening up more downside down to 120, 110. That also is an indication why the market is not going to be supported, because there's no way I think the Russell could collapse this far with the indices pumping more. It just doesn't seem probable to me. So anyway, yeah, there could be a double top. I explained that view that if the market does make new highs, it's just a massive expanded flat, and then we would look for a massive crash later, like a 2009 style panic, straight down crash, then not a choppy correction. That's what that would mean if that happens. Yeah, I think that's what we're seeing. The rally seasonality and the Christmas rally always comes into play, and we're seeing. I think that's what's helping the market now. Get bounced so strong in this counter trend rally, but at the end of the day, we saw a bad December last year. It doesn't matter. It's just those are memes to get people to buy, to feel comfortable to go long, and they'll definitely push that if we're in bear markets, so that fork out your money. So I would just say I ignore that type of talk, seasonality and stuff. I think that's irrelevant in how I trade. It is just to me it's interesting. I've never seen it discussed more than I've ever seen it this year. Seasonality, I've never seen it played because, again, the institutions need that money coming in, and so they need you to go long. They want that capital. They don't want you to sit on it, so they're gonna pump seasonality as much as they can. But last year, how did that work out for you? Ask it. I think December sucked last year, if I remember right. So, all right, TRJN. I'll go through yours real quick, and then I think I got to wrap it up. BROS. Let's take a look here. I believe we have that. Oh, we lost our labeling on this chart. Yeah, I mean, the downtrend's been broken. Here, it's just at the RSI double bottom there. The weekly is open. The daily is peaked, just like the rest of the market. So it's due for a pullback, but long term it should stay supported. But it's due for a pullback right now. So shorter time frame, it looks like 3 waves, not good. It's due for a pullback, so more than likely this low could break. So just keep that in mind. Like we saw, these are all been 3 waves. They keep breaking. But ultimately, 20 has to hold. If 20 doesn't hold, then it could have a much larger declines. But I do believe it should break this low and at least hit 21.25 or break 20. And like I said, if it breaks 20, then it's going to 12, this area. So it's tough to say where it's heading. It could head here. If this low breaks, it's going to 12. If 21 holds, I mean 20. If it could bounce at 21.25, and then if that low holds, then it's going to shoot up. So other than that, it's tough. It's a hard chart to analyze. It does look like to me 3, so it's like a corrective move, but not enough price data to properly analyze it. So you'll have to do what's best for you on that one. SYM, symbiotic. Yeah, I've been keeping my eye on that one. Yeah, so I haven't changed this chart. The B wave just became more complicated, and now we went down, and so we're looking for. Let's make sure this target. I'm not sure how old that chart is. 2518, this area. And again, if it's moving down, we hit 1, 2, 3, 4, 5. Something like that. Okay, the next one is cocoa. Lost our labels on that one too. This could be a completed cycle. This is really tough. Because again, there's not a lot of price data, which always makes it hard to analyze. See, this is only, I bet it's like this. I think it's going to do that. And that gets you the 35.79. And as long as there's divergence here, it's 5. If the daily divergence erases, then it becomes 1, 2, 1, 2, 3 of 3. And go check out Celsius to see what happens when that happens, because these things can do that. So don't think for a minute, oh, I'm going to short it here, because this could turn into another Celsius and just extend and blow up the shorts. And, so you just don't know. But I do think it looks pretty bullish. I guess people are drinking this stuff. What is this, like coconut milk or something? Yeah, I go into everyone's house and they're drinking this shit. Oh, is it coconut water? Yeah. So yeah, coconut milk. Yeah. So everybody's getting this now. So I don't know. I mean, it's like Celsius now. They're everywhere, right? I posted that, like I was seeing Celsius in every vending machine. They were always out, It's like, I don't know. I don't drink this coconut stuff, but I go to people's houses and stuff. They all got it, So I don't know. Do what's best for you on that. Rivian. I don't like any of the green energy stocks. They're all being decimated, and they need to continue lower. Rivian's no exception. I would avoid it, but let's see what the structure looks like. How detrimental is it? So we called the impulse perfectly, A, B, and now we broke low. So now it turned into 5 waves down. So this is going to be a very complicated correction. With bullish divergence, we're in the same cycle lower. So as it stands now, I would label it this way. Which means it should bounce but fail, right? A lot of sideways chop is what I'm thinking. The only way, if we could erase divergence, that would be better. And it could still do that if it could push down and erase divergence. It sets up a buyable dip at 1431. But you would have to see divergence erased with a stop at 11. That could possibly defy, it could possibly do that, but you would need a capitulation type move to erase. If not, it's just going to chop around here for perhaps months and months. So anyway, do what's best for you on that. Genie. I was like, what is that? Looks like we've done that chart before. So we didn't get the 5. Well, I guess we kind of did. You could label that the 4 and the 5, and now it's in the corrective structure. And that looks like an impulse down. So we should be in a bounce here. And since it's 5, it should fail one more low. But let's look at this one more time. Yeah. Yeah, I'll be looking for more upside. I think B's got more upside coming, but it should fail at some point. But I bet it's got some more upside coming. I bet it's got some upside coming. I can I mean, with these things, who knows how, these things can spike, But I bet the spike will fail. And then EE, accelerant energy. All right, let's see here. Yeah, not a lot of price data. That's a problem of trying to analyze these charts with not that don't have a lot of price data. Um, I'd like to see it make one more low with some bullish divergence. But on the shorter time frame, it made a higher high, so it should still go higher. It should see 1957, and then it's going to overlap the one there. So then that would end probably this whole cycle. So that make it three-wave cycle. And if it's three waves, then you have just a bigger corrective structure. Yeah, it's gonna be hard to label because there's just not enough price history. I do think shorter term it's going higher. It could pull back in this area, but I don't think it's likely. I believe you've got, again, just a lot of three-wave action here. Actually, it would be better to label that like this. Yeah, my guess is it's going to push higher than that. It's in a new cycle higher. Um, but you you have to do what's best for you. I wouldn't I definitely wouldn't like trading it unless I knew had some fundamental knowledge about the company that maybe isn't obvious to most traders. Something like that. But I think it's clear it got more upside. All right, thanks for the 10. Anonymous for 5. Mara. Yeah, so that's my warning side for crypto, guys. I didn't mention Bitcoin. I know this feels great, but really, again, big picture. Again, you have to always zoom out. Look at the big picture. We're still in a downtrend. I do believe this is some kind of sea leg that will eventually end and go lower now, based on the more, again, these structures morph all the time. But I do see a big pullback coming, and I believe you're seeing that with the underperformance in a lot of the crypto equivalent stocks, most altcoins, not all of them. So yeah, I know it's sad. No one wants to see this. No one wants to believe it. And in fact, the C could keep extending, but I think this is just a connector wave, and there is another leg lower to come in the market. So with that being said, let's go to crypto and go to Mara. So yeah, Mara is showing you danger, right? There's danger in the crypto community. Because this thing should be pumping, guys. There's something wrong. There's something wrong. This looks like 5 down here. So, you know, again, this X wave, like it could be doing that. We could still be in X. Like there's too many possibilities here, but this ultimately, as long as you're below 1072, the bears are really in control. Now, if it can break 1072, it will extend higher, but it would still fail. But then it could become a short opportunity given the chart. So right now, I don't see that opportunity. What I see is 1, 2, 3, 4, 5 down, and I see 3 up, and now we're in like a indecisive area, and like I said, it could do it still could extend an X a little bit more, but I wouldn't count on it. And will it go bankrupt? It could, right? Again, this is your go to zero. Like if it breaks 313, then the chart indicates it's going to come back down and retest whatever this low is, 34 cents. I don't know if that goes bankrupt, right? But it's going to be under pressure. And that's how I look at these charts, guys. That's how I look at these charts. But this should be up here, given where Bitcoin is, and it isn't. So you gotta, why? Why is that the case? Why is that not the case? Let's take a look at Coinbase. We haven't looked at Coinbase. How's that one doing? A little better, but still not out of the woods. So yeah, something doesn't seem right. Something just doesn't seem right. But you guys will do what's best for you on that. Look at that. Now that was a good trade here. Massive inverse head and shoulders. I mean, look at that. Crazy. But it's very illiquid, these. So it may be only like 3 trades for all I know that got up there. But anyway, I'm not really watching crypto at the moment. I'm not a believer in this what I'm seeing here. I just don't believe it long term. All right, I'll just scan through your last comments and I'll be ending the chat. If there's anything quick I can answer. Okay, I just did my Bitcoin update. I haven't seen TMDX on this in a long time. I used to trade that, by the way, a long time ago when that shit was pumping. I mean, we'll save that for another day. I think I did TMDX in 2017. Right? Yeah, I think I saw. I'm familiar with that one. TZA is just like the Russell. I did FNGD already earlier. You can watch my video again. Yeah, maybe I should do a crypto. That would be nice. I'll do Nifty in my next market update video. I was looking at AHR still being decimated. Nvidia should be coming close to pulling back and finishing its 2-wave. I'll do that on my next video. Oh, Japanese firm geode or something. Yeah, no one knows who Aladdin is. But obviously, they're using the VIX guys to manipulate the market. I mean, if it isn't any clearer, the enabling mechanism to move the indices is through the VIX. I mean, this is what's happening. These VIX, but even the VIX mathematically can't go to 0. So I think there's a limitation here that they just can't. You know, there's a lot of support here at 12. Like I mean, it just. I think again, it takes. Whatever is happening, it takes exponential energy to push the VIX lower and lower beyond these points. And they aren't, you know, they don't have unlimited power themselves, right? They're not infallible entities. So, but I think the VIX is the mechanism being used to push around the indices up and down. But eventually that day will come to an end. And I believe whoever Aladdin is will be blown up. And we'll hear about them, and there'll be stories written about them. And when they blow up, the market will essentially go back to being more better at price discovery than we've seen. I mean, you're just seeing when you go out in the market and you see stocks fall 60% in one day or whatever, is that means market price discovery was what failed. Because if fundamentals in price discovery, that should have been closer to, like, a company just doesn't go out of business overnight with the chart trading way the fuck up here, you know. It's gotta that if it's trading way up here and it's like, oh, we're going bankrupt, guys, and then it drops 70%, that's Aladdin, somebody keeping the market up, and it's not allowing natural price discovery to allow the stock to drift lower so shareholders can go, what the hell's going on? Maybe our strategy's flawed. It gives a false sense of everything is fine, and then boom, a huge disaster, and then everyone loses their money overnight. And even Aladdin can't hold a worthless equity, right? You know, the fundamentals eventually trump everything in the end. Um, Company's worthless, the equity's worthless, no matter how much Aladdin can pump it. And the same thing goes, you can't suppress a price only so far, and then they'll get taken over by somebody and be bought out. And then, you know, Aladdin gets blown up that way. So one way or the other, the fundamentals always rule the market, guys. The fundamentals rule. The technicals just kind of help us analyze how we're, you know, the direction and kind of the probabilities. But the fundamentals rule, and Aladdin will be blown up by the fundamental picture. It has to happen. All right, guys, that's all I've got. I appreciate everything, and